Good morning, hope you're doing well. We've got a fairly bearish outlook today. What happened yesterday, we had a very much stronger VIX, and the WTI was also pumping as well. Now the oil needs to be monitored, because if it gets too out of hand and it really pumps, it's going to feed into a higher inflation narrative. So the Fed will be likely pause or hold. If the inflation doesn't go down because of oil, then they're likely going to hold, and that's just one of the reasons why the dollar was quite buoyant yesterday. It really did pump. Our trade setup's going well, our Dixie, so that's our entry, that's our stop. So we're nicely in the green area, and I was saying we need to be a little bit careful because of the fundamentals, and if we do get higher inflation, that's going to aid this idea, because the Fed are likely going to sit on their hands and they're not going to cut. If they don't cut, this is probably going to propel higher. Okay, so because of that, we went a little bit risk off yesterday. It's really interesting to watch the VIX pump 6%. The WTI was up 1.5%. They managed to crush crude oil down, but they couldn't crush the VIX down at the same time. So it was like a case of not having enough resources. So they managed to crush VIX. I think it went to -1%, and then it came up again. It was like holding a balloon underwater. It was just having to come up because of the geopolitics in the Red Sea. So if you can watch these two on the trading view, watch these two. They're actually quite interesting. See, they managed to crush crude 1%. VIX is actually up 5%. So eye on that. That should be coming up higher fundamentally, but they're suppressing it because they don't want a higher inflation. So the big boys are putting their money trying to stop this from going too high. Okay, so keep an eye on that. If that pumps today, we're going to be quite risk off. Okay, and because of that, we might be wicking a little bit on the Dixie there. Yields are green, apart from the long dated yields. Okay, so yeah, we had quite a big change from last week. Note UK 100, they're now long at the big picture. Okay, so that's of note. Dollar Swiss, ignore that because it's really skewed. It has been moving a lot, but they were really long, and now they're just long. So it's that difference over time from last week, and that's why it pumped. One of the reasons why it pumped. Of course, what I said about the fundamentals helped as well. QDB scores. They're long on GU now. They haven't actually moved on the day. That's just interesting. I have done the API. Yeah, 8.45. Yeah, they've just not moved on GU. So that's fine. They're long, but I don't know what they're going to do now, because we had all that inflation data from the UK this morning. So this should be quite useful, and you can see big movers as well. So they'd shorted EN, for example. So that should be doing okay, and it is. We're plus 0.29, and that's how it works. Okay, so they've gone long. See that black bar? So price has fallen. Alright, and that's how that works. Okay, EA, they shorted it. Is it doing well? Yes, of course, they're getting punished. Alright, so that's how that works. It's working really, really well, these two columns. Robot, oh, I'm done. Ah, stupid thing. No, okay then. Well, there you go, it's just really slow. And looks like we're going to profit on our NU and AU trades. Now, because our TP is greater than our SL, we should be doing okay. This fib needs to move now because we've got a new zigzag. Oh, nice. Yeah, that's a bit weird. So yeah, we've got a new zigzag. So remember to map it. If we're above the 50%, we're like in the buy area. If we're below the 50%, we're in the sell area. So it's worth noting just to keep it at a high level. I'm not sure what that red line is, but we can move it to the 50%. I'll do that later. I don't know what that red line is, but remember just to be really, think of it like a machine where we're looking for 50%. It's like a binary value, isn't it? It seems that my computer's going super slow. I can't even drag a horizontal line. That's weird. God, maybe I'm getting Windows Update. That's probably what it is. Yes, remember the 50% rule. Okay, this is the QDB optimal entry strategy. I'm going to do a screenshot of this and I'm going to post it just to remind people just to be careful, because we're on this side of the 50%, aren't we? So I'll copy that. We can talk about the market scope now quickly, and then so we're going to probably make a buy on gold, but if those yields pump, then it's going to overshadow the sentiment. When you think this is just using retail sentiment, you know, you're probably looking max $100 million, you know, in this particular setup. When you look at the US Treasury yield, you're talking about billions, all right, maybe more. So there's obviously this is obviously very, very powerful. But if the whales are going to pump into yields, and they're trying to suppress oil and VIX, you know, there are other things at play, big fundamental forces in play. So this is incredibly powerful and very, very accurate, but we can't forget the macro, you know, the fundamentals that are going on in the world. And if the US yields pump, it tells us that the money is going into the treasuries and not into gold. So that would be like the preferred safe haven. So be careful. Even though we might get a buy, it might just fall anyway because of the fundamentals. Okay, so be careful, and don't forget we're below the 50% as well, as I showed you. 2037 is that level. All right, so we go above, could look for longs. S&P. Yeah, my computer's worrying a little bit, so it's like there must be something going on in the background. Maybe Windows update. So we should be below this box because they're going long or less short. So we should be breaking these lows. So that sort of note. We were so skewed, it was ridiculous, and we probably have to come out because they've ejected the bears out. These moves look like a shakeout to me. You wouldn't want to be trading that, would you? No, you couldn't possibly trade that in an hour. That would blow you up. Well, not blow you up, but it would do a lot of damage. I don't think you could actually trade that. That would be an untradeable spike, and that looks like a shakeout potentially. And don't forget that the big fish will want things to fall slightly so then they can buy again. Okay, so that's the key thing, is that if we are at all-time high, it doesn't really present any opportunities. If it comes down a little bit, then it's going to be a buying opportunity, right? So that's some logic there. S&P. I think we did S&P. Oh, okay, so we should be below this box, which we are. We can draw a box. Should be drawing these boxes, to be honest. So we should be below this. Okay. Yeah, that's fine. Just go back to US 30 quickly and draw a box. And we should be below this one, this doji. So the doji is a bit of a pickle because it's indecision, technical indecision. So we should be below that doji, all right? But you know, have to be careful. DAX. Yeah, I'm thinking I'm getting Windows Update. I think that's what it must be. So we're crossing over. That tells us that they're going long. So if they're going long, it's a sell. But it's a risky sell because we're really below the 50%. All right, so we should be below this. I was saying in Discord that this candle was fake. This pump was fake, and you know, look, we're actually going red. So that was pretty spot on. And it's easy to spot fake price action using this setup. So we should be below this box. We shouldn't have been pumping because they're going long. This is why this is going red, right? And that's the logic there. I'll wrap up now because I don't want to make it a long video, and I'll speak to you guys soon. I wholeheartedly recommend fxsi.com and their indicators for MetaTrader 4 and 5. It's a 7-day free trial, so do have a look. There's no credit card required. You might be lacking in some sentiment awareness, analysis, and it does complement technical and fundamentals very well. Especially if you're very technical, you could be missing out on some sentiment, or if you're particularly fundamental, you could be missing out on some sentiment. This is like a sweet zone. It complements both, and it gives you a very strong bias about direction as well. So technicals are great for direction, fundamentals are great for direction, but the sentiment sits in between. Okay, and so perhaps if you're missing out on some sentiment awareness, these are the best indicators in existence in the world for that. And then you can have a look at this. You've got a 7-day free trial, and you've got your order book, and you've got your indicators, including the ratios, which are amazing. Just look at my videos on my YouTube channel and you can see how powerful the ratios are. And you can have a look. Just take your time. You've got 7 days to trial them, and if you don't like them, then that's fair enough. You don't have to renew, but we do have a code if you want to, and it's just the QDB code, and it gives you a 10% discount, and that's it. So have a look, see what you think. And like I said, it's a 7-day trial, so you don't have to renew, but I think you'll probably find you will renew afterwards, because the order book and the ratios and the stop loss clusters as well are amazing. The stop loss clusters are great because you know where to target. Okay, so that's where you take profit, where people get stopped out. Okay, and that's it. So just a quick plug for the fxside.com, and enjoy your day.